Hello again, fellow BeachBum traders. Thank you for joining us for part 1 of our weekly trading game plan for the trading week of March 14th through 18th. Bears make money. And in part 1 of this week's weekly trading game plan, we're going to show you how bears make money and how you can make money in this bear market as well. So let's get started. Okay, first I need to credit Jim Cramer with the excerpt that composed the title for this week's trading game plan, which comes from his adage that bulls make money, bears make money, and pigs get slaughtered. So in this part 1 of this week's weekly trading game plan, we're going to talk about the fact that bears make money too, and we're going to show you how bears can make money in this bear market. Okay, let's start on the home page of FinViz, and as always you can find our affiliate link to FinViz in the description box below and or in the trading tools links category on our home page, beachbumtrading.com, bum without the U. So if we look at the home page of FinViz for how we ended the markets on Friday, March 11th, we can see steady decline throughout the day. We can see far more decliners than advancers, far more lows than highs, and the majority below the 50 SMA and below the 200 SMA. We can see the heat map is pretty much all red with a few exceptions like Pfizer, etc. So we've been saying for several weeks now we're in a declining market. I've been calling it a bear market for a while, and I think others are starting to also say yes, in fact we are in a bear market. So again, now we're going to talk about, we've already talked about in the past couple weeks how you can make money in any kind of market, bear markets, bull markets, flat markets, etc. So again, we'll reiterate that and show you more ways how you can make money, how bears make money too in this kind of market. So if we just scroll down to the bottom, we can see some of the quick news. Obviously the war in Ukraine, the Russian war in Ukraine is top of the news, and it's definitely impacting the markets. And then, again, and then we had a drop in consumer sentiment. We'll see the economic news that came out, again, far outshadowed by the war in Ukraine right now. Then we could see, oil originally or earlier spiked up to, I believe, above 130, has since come down. We'll talk about that when we get into the futures, etc. Natural gas kind of ran up a little bit. It's been pretty flat. Again, we'll see that in the futures. And gold, I think, hit a high in the 2060s and has since come down. And then we can see all the futures are down on the markets, with the largest decliner being in the Nasdaq, the tech heavy Nasdaq. So, and then we see the treasuries, the 10s to 30s are all in the 2% range, and the 5s are almost 2%. So again, something we've been saying for some time. We expected these yields to come up above 2% or near 2% because of the Fed's inflation goal around 2%, and we'll look at the behavior in the treasuries again in a minute as well. Okay, if I jump over to the Groups tab in FinViz, we can see the sectors performance for over several time periods. We can see Friday, March 11th, everything was red. All the sectors were red, with the least red utilities, financial, industrials. If we look at the 1 week, similarly all red again. The least red was energy, utilities, and financials. And then for the 1 month performance, and this is something we looked at last week, who was outperforming, what we see again is energy and basic materials. So you can kind of again see this theme, over the the longer term, the most positive sectors are going to be energy, basic materials, and utilities. So those are the sectors that you probably have the best opportunity for, a bullish trend, and also the least negative. So those are the sectors that we want to focus on for longs. We can see the worst performers are technology, consumer cyclical, consumer defensive, and communications on Friday. So again, and even over the month, consumer cyclical and technology. So if you're looking at a short position, technology and consumer cyclical are definitely the sectors you want to take a look at. So now I'm on the futures tab of FinViz, and we can see where the indices and commodities, etc., ended up from a futures standpoint. We see steady declines in all the market indexes, and we can see the nature of a bull market is, we have these lower lows, lower highs, and then these violent upside reactions, which is very typical of a bear market. Again, we will have these violent upside corrections, and this, the mentality, instead of a buy the dip, it's a sell the rip mentality. That's the nature of a bear market, and so we're seeing that as every violent correction to the upside gets sold off, and then we go to a lower low. So again, all clear indications of a bear market, a declining market. We talked about in the past, you flip your mindset, flip the charts, and it's the opportunities are the same as in a bull market. It's just, we're playing to the downside instead of the upside. So we're looking at, longing short ETFs, etc., instead of longing long ETFs, and shorting stocks instead of longing stocks. So again, just flip your mindset. Plenty of opportunities to make money. We'll talk about more as we go forward with our weekly trading game plan. So if we look at the VIX, and we'll talk about this in more detail and how we made money trading the VIX this week in part 2. But again, we could see the VIX ran up. We had this strange behavior we talked about last week, and we talked about how we were going to play this. We had a spike, and then we had a decline, and then we had a small correction on Friday. Oil, as we talked about, ran up, spiked up to 130, started to decline. Again, it kind of leveled off on Friday. There's still calls for oil being much higher, and we'll talk about that more in a minute. So again, we see that in all of these oil futures, and then we see natural gas has been range bound lately, so bouncing up and down. All the commodities have been great opportunities, and we'll talk about the opportunities in commodities. We've been talking about it for several weeks. We can see the type of behavior that we typically look for. We got this run up, spike, almost a tweezer, and then a decline in gold. All the precious metals look similar. So again, you see this type of behavior, there's the opportunity to go short on these. So again, all the commodities had extreme run-ups because of the war in Ukraine. Wheat was one of the extremes because of the amount of wheat produced in Ukraine. We'll talk about some of that in a minute. I have yet to find an ETF to short these. It's unfortunate because you could see the behavior clearly indicated an opportunity there. So again, we see that in so many of the commodities. And then we see the bond behavior. The fear, flight to safety, etc., drove the prices up for a little while, but now we see a steady decline, and these are making new lows and continuing down. And we'll talk about how do we want to play that in the face of the Fed's quantitative tightening. Again, we have the Fed meeting coming up this week, and we'll talk about that in more detail in a second. Okay, just a real quick reminder that we have compiled a list of ETFs that you can long or short, the various indices, the various commodities, etc. And you can quickly and easily find that list a number of ways. One way is by looking at the pinned comment underneath our previous video, how to make money from a bear market. You can go to the main site of our BeachBum Trading YouTube channel, look at the videos, do a quick search. If you enter bear, this one will quickly rise to the top, and again see the pinned comment for that list. Another way is in the ETFs channel of our Discord server, which you can get to both the Discord server as well as in a second we'll show you the Facebook group by going to our homepage, beachbumtrading.com. You see the social media sites. You can find a link to our Discord server there, as well as under the Discord servers link category. And under social media, we'll look at the Facebook group, the BeachBum Trading Facebook group. We also have it in a featured post there. So you can again find this list a number of ways. The ETFs channel of our Discord server, there's a pinned comment that has this list of leveraged ETFs. And again, if you go to the BeachBum Trading Facebook group, if you look at the featured posts, you can scroll over, you see the bear. And again, this featured post in the Facebook group also has this list of ETFs. So a number of ways that you can access this list of ETFs we compiled to long or short any market, the indices, commodities, etc. So we hope that all helps. Okay, now I wanted to show you how I use the global tab of the market screen in Webull. This is the online browser version of Webull, and as of the time of the filming of this video, Webull is offering 5 free stocks when you open a new account, and you can find our link to Webull in the description box below and also on our home page, beachbumtrading.com, bum without the U. In the trading platforms links category, you can find our link to Webull. And again, right now, as of the filming of this video, you can get 5 free stocks with Webull. Okay, I like this global tab on the market screen of Webull, in particular early in the morning at 4 a.m. and you can see my previous video about my 4 a.m. routine, but this is on Saturday on March 12th. We can see how the markets ended on Friday, March 11th, but again during the day this is active and we can see which markets are open and whether they're red or green, what's moving, as these trends tend to affect the further global markets as they open. Again, I'm looking at the global view, but another nice thing about this tab is you can focus in on a particular continent, so we can click on North America, focus in on North America. We can click Europe, focus in on Europe. Click Asia, focus in on Asia, and zoom back out to focus globally. And again, during market hours in these areas, these are active, and you can see the current green, red, plus, minus effects on each of these markets in real time. So again, very useful. We see how they ended up on Friday, March 11th. Asia was green, Europe was green, North America was all red. The other thing to note about these global markets is they tend to cycle around the clock. So since these guys closed earlier and then it trickled into North America, we see North America trickled or closed red. The tendency is now for the Asian markets, unless something happens over the weekend in this particular case, Asian markets will be affected by the outcome of the North American markets. They will have a tendency to close red, etc. So that's just a general tendency, but again, that's why I find this useful to watch in real time, particularly early in the morning when the North American markets are still closed. So I hope that all helps. Okay, if we very quickly focus in on the US markets on the Markets tab in Webull, and again, right now as of the filming of this video, you can get 5 free stocks with your copy of Webull via our affiliate link in the description box below, or in the links category under trading platforms on our homepage, beachbumtrading.com, bum without the U. So again, if we look at this as of the close on Friday, March 11th, we can see more decliners than advancers. The degree of the decline was mostly small with a little bit of a tail. If we look at the net inflow, we can see the NASDAQ is taking the hit in terms of the majority of the outflow. The NYSE only had a minor outflow. So if we then very quickly look at some of the best performing indices, again, they mostly closed all red, so we're looking for anybody who outperformed. And we can see we've got a few. Packaging isn't bad, construction isn't bad, some education. Again, we expect mostly red, so we're looking for, okay, a collective, a basket type of investments is green. We're looking for these greens, papers green, and conglomerates, consumer, okay, GE, etc. And that the GE, there's some renewable energy aspect to that. Transports are a little green, so we do have some green industries for in the best performing. So if we look at ETFs very quickly, and again, I have a previous video on how to use this whole market screen, so I won't go into a lot of detail here. We could see up on the VIX, so increased volatility, down on all the other indices as expected for the bear market. We can see SQQQ, so that's down. Again, you can see our list of ETFs in the various places. If we look at industries, again, we expect mostly red, so do we see any strong green? Okay, financials had some positive, some green. Commodities will probably do well. What kind of commodities? Precious metals, aluminum, gas. So that's kind of a little new. Again, precious metals, gas, and broad. Total return. Okay, so that's interesting. And then bonds, 15-year tips, inflation, 25-year, so long, and tips, and inflation-oriented bonds. So that's all interesting, so I hope that helps. Okay, let's talk about some of the economic data from last week and what we're looking forward into next week, and strategize how we're going to position to make money in this bear market given these events. And I also highlighted just some of the news events that came out this week, as obviously the Russian war in Ukraine is overshadowing a lot of the economic data. So you can see on Tuesday, on the 8th, Biden came out, said they're banning all Russian energy imports, including oil, coal, natural gas, and obviously this caused a spike in all of those commodities due to the loss of supply. And we'll strategize in a minute again how we're going to play this going forward, what other events may affect those commodities. And then Wednesday we got the JOLTS report, jobs report. We'll see in a minute that came out with higher than expected job openings, which is a positive. Then on Thursday, some of the news items, 40-year high inflation, and as of Thursday, the peace talks, I wouldn't even say peace, the talks between Russia and Ukraine were not making progress, so that obviously hit the markets on two fronts. And then we saw deepening losses due to inflation data. And then we'll talk about the Fed rate hike, because next week we have the Fed meeting and the Fed announcement. And then we had some negative jobs claims data we'll quickly spin through in a minute on Thursday. So again, a lot of negative news this week, and we saw the effect on the markets. And on Friday, we'll see the consumer sentiment data was not terribly positive. While I'm here, we'll also quickly look at next week. On Tuesday, we do have producer price index data, which is inflation data. Again, we expect inflation to be hot. It's super hot. We've been saying for a long time it's hot. And then on Wednesday, we have the Fed FOMC decision statement press conference, and we expect now, because of the war, etc., People are starting to back off a little bit from this 0.5 rate hike. At least the markets are backing off, and they're saying, well, maybe we'll only get a 0.25 because of the negative market. But again, people are also saying the Fed's way behind the curve. And we're also going to be listening for their schedule for quantitative tightening. What bonds are they going to sell? How fast? When? We need that clarity in order to make any decision on positioning in bonds. Then on Thursday, we'll get jobless claims, typical jobless claims data. This is after the Fed decision already, so this will be feeding into the next Fed decision. And then Friday, we have a quad witching options expiration date, OPEX date. On Friday, again, this happens 4 times a year. I'll leave this link to this reference in the description box below. We also have it on the website, and you can get to the economic calendar. There's again a reference to this quad witching, to the OPEX calendar. You can see that. And also the link to investing.com where you can find this economic calendar. And again, if we look at this week very quickly, we can see just kind of the reds and greens. Not much on Monday. Tuesday, trade balance red. Crude oil stock red. Wednesday, the JOLTS was positive. The job openings is positive. Inventories, gas and oil negative. And then Thursday, jobless claims was lower than expected. Continuing was lower than expected, but new initial was higher than expected. So a little mixed in that regard. And then on Friday, we saw consumer sentiment data was negative. It was worse than expected. So that does not bode well for the economy, obviously. The inflation is hitting everyone's pocketbook, the high oil and gas prices, and so sentiment is not unexpected to be negative. And then if we look forward to next week, again, we see PPI data, inflation data on Tuesday, retail data on Wednesday. Again, with the war in Ukraine, some of this economic data probably is not going to get a lot of focus. And then we see at 1 o'clock, 1 p.m., 1:30 p.m. Eastern Time is the FOMC, the Fed decision, etc. We expect a lot of volatility around that. And then also on Friday when we get the okay, so Thursday we have jobless claims data, typical, and then Friday is a quad witching date. So this week we expect a lot of volatility, right? We've got all these events that cause volatility. So we'll talk about a strategy for how to play volatility again. Okay, let's talk about some other trends and then our strategies going into next week, how to pick our stocks for our watch list, and we hope you'll come back tomorrow to see what stocks, ETFs, etc. that we're going to be watching for next week for the week of March 14th through 18th. So obviously the Russian war with Ukraine is the top trend. Some notable pieces of additional data that you may or may not be aware of is that one of the things that was pointed out is that if they don't get the crops in Ukraine planted very soon, they're going to miss their entire growing season, which means all of the wheat, all of the crops that are grown in the Ukraine that supply a lot of the markets globally are going to be lost. So there's going to be a supply reduction, which means those commodities are going to stay elevated for a long time until another growing season can replace them. So areas to watch, again, it's going to keep those commodities elevated. Oil, another point that was made is that even lifting sanctions on Iran would not replace all the oil lost from Russia in the global supply chain. So you'll hear the U.S. is now even talking to Venezuela, they're talking Saudi Arabia, etc. So those are a catalyst for a reduction in oil price to listen for. Do they cut a deal with Iran? Do they get oil from Venezuela, etc.? And they're in talks right now, so listen for those deals to be made, because that will cause a drop in oil price if they cannot make such a deal to replace the oil supply loss from Russia. Oil may run up. Again, people are talking about ridiculous prices, 200, 300, etc. So this oil and gas are definitely going to be a focus again next week. A lot of volatility. Another one that hit markets this week was nickel. We found out, there wasn't enough nickel in the world to supply all the EV batteries that all these car makers are coming out and promising in the next couple of years, and it ended up with the nickel market being halted on the 8th, on Thursday, I believe it was, and all of those commodities ran up. So again, all these commodity markets are very volatile and now in focus. A lot of opportunity if you're a day trader, scalper, etc. Momentum trader, a lot of opportunities playing the commodities. Keep an eye on that FinViz Futures, etc. And plenty of opportunities to make money. Even though the overall markets are in a bear market, these commodity markets are in a strong bull market. So that doesn't mean, another thing Jim Cramer says, there's a bull market somewhere. So right now it's the commodity markets. Also, trailing on high oil prices, renewable energy is in focus, and EVs, etc. Batteries, watch these for following on these high oil prices. So again, another area of bull markets in these areas. They've been beaten down severely over the past year. They may have their time to shine again. Look at all the elements in EV batteries: cobalt, graphite, lithium, etc. All of these have, here's an example of a battery stock that does battery recycling, because we just saw there's not enough nickel in the world to produce all these batteries. So somebody's going to have to think about this and think about recycling them, and there's opportunity in load there, which we are long load, have been for a while because of this theme. Some questions we can talk about going forward: will high oil and gas prices reinvigorate the work from home movement? Again, I'll post this in our Discord, possibly in the comments in the Facebook group. We can talk about this further. And then China. You heard probably that the SEC has identified a number of Chinese companies that are not going to adhere to this Holding Foreign Companies Accountability Act, which means they're at risk of being delisting. And so the whole Chinese ETF got slammed because of that. We've been talking about this issue for a while. We've been out of China totally. We went out of Russia when it started the war, etc. So another thing to look at is companies that are violating the sanctions against Russia. The U.S. is threatening to retaliate, and part of those sanctions is you can't use U.S. technology in a product you deliver to Russia. Well, that includes chips, and China's a lot of the products, technology products China supplies to Russia include chips that were built with U.S. technology. So is the U.S. going to retaliate, and then how is China going to react coming back? So my personal opinion is that these trade relations between the U.S. and China are at risk, going to get worse because of all of these issues, and therefore, as I mentioned, we're already out of China. But you want to think about, again, we mentioned this before, companies that are at risk, have Chinese exposure. Check your portfolio, make sure you're not going to get hit because of that Chinese exposure as well as Russian exposure. We talked about that last week as well. So we hope this all helps. I know it's a ton of information, a ton of input. I hope you'll come back tomorrow and see how we're taking all this input to pick our stocks for our watch list. We can talk about all these topics more tomorrow. And we'd love to hear your comments. Please let us know what you think of all of this in the comments below, in our Discord, in our Facebook group. Let's talk about all of this, and we hope to hear from you, and we hope you like this. Smash the like button. We hope you'll subscribe to our channel if you're not already subscriber to our BeachBum Trading channel, and we look forward to seeing you tomorrow. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.